Hey everybody, Marty Mazur, good morning. 5th of February 2019, yet another update of the chart we've been following lately. I mentioned here recently when we were just breaking through this down trend line, and we seem to be holding that, the 2700 could pose some resistance, went right through there, have found support, and that the next potential resistance would be the 200-day moving average. And ironically, here we are this morning virtually touching it and then coming down off of that. You would expect some consolidation around this 200-day moving average. If we shoot right through it, then we've got the 2800 to contend with. As we've been discussing here all along, the underpinning for this is pretty strong. The rhetoric around trade just keeps getting better as we near the deadline on March 1st for the US and China trade negotiations. I showed you the other day that we still have a relatively high level of short interest, a high level of money market fund assets that's just really accumulated over the last couple of months, and relatively low sentiment. So those three factors really serve, in my mind, as potential fuel to push this market up through some of these resistance levels. You get some ill-conceived commentary related to the trade war or Brexit. Those would be the two big headline risks out there. You could see this thing tumble in a hurry. A lot of people have made a lot of gains off of this bottom that they might be anxious to protect in the event that we get some bad news. Other than that, though, the technicals are showing me strength. I share with you here the on-balance volume. Last time we looked at this, we had this downdraft here, but we had a higher low. I said that if we continue to move higher, if we get another surge higher on the on-balance volume, that will tell us that still the buyers are more passionate in here than are the sellers, and that's clearly this message here. So once again, significant underlying support as I speak, which at least in the near term makes the likelihood of a retest of this December 24th low less likely. But of course, history suggests that that's something that tends to happen, so we'll keep our eye on that. In closing, I want to show you just one more very popular technical indicator. They call it Fibonacci retracement. What you do is you go to a recent peak or a valley. In this case, we're going to go to the peak on September 24th, and then bring it down to the bottom on December 24th. The key levels on the Fibonacci retracements are the 38.2, the 50, and the 61.8. So typically what happens is when you have a big move, you're going to come back and retrace some of that move. You can see how we came and hesitated right around the 38% retracement, really hesitated around the 50, and then the 62% retracement, just a slight hesitation, and now we're trading between the 200-day moving average and the 62% retracement from that. So I bring this up because folks do trade these levels, and you'll often see activity right around these lines. And then you look at other confirming technical indicators to determine whether the market is likely to break higher or break lower out of consolidation areas like these. Now, when we move it back longer term, just looking at a 5-year chart, and we line up the Fibonacci retracements all the way back to the February 2016 low after we saw about a 14% decline from this peak to this trough. How ironic that when you go from this bottom to this peak and you begin to retrace right at the 50 is where that decline got stopped, and we bounced right off of that. We really should expect some consolidation and even some give back here. And of course, we can look at these levels to see where traders might come in and buy, all things being equal. Now, we here at PWA, on behalf of our clients, are really a fundamentally driven shop, meaning our long-term sector and asset class weightings are really going to be based on underlying fundamentals or general conditions, as I like to say. The technicals help me explain to clients what's going on under the surface, what is perhaps inspiring volatility on any given day, week, or month. It also might give us entry points with new monies that come in. It'll often flag some trouble, for example, in a certain sector or a certain security, that'll have us go deeper and do a little more fundamental work and see if there's anything underneath the volatility that maybe we should be thinking about or concerned about. So the technicals are important. And again, they're great tools for me to help you put the noise and the volatility each day into some perspective. Thank you as always for watching and listening, and I'll talk to you again very soon. Take care. Bye-bye.